two trading setups we were encountering this week, and in this video you will learn how sometimes, especially when the markets are powerful and trending, you will see that sometimes you will miss the trading setups, and we will go over both scenarios, over both setups we had on the euro US dollar this week. One will be from 9th of March, and of course the one from today. So first of all, we'll start from the 4-hourly time frame. This is where we always need to forward our analysis from the daily to the 4-hourly time frame, and what we were watching here was of course this bullish structure. Market formed this swing low, moved to the upside, and it created and formed a new swing high. On the break to the upside, market also left us with this, as you can see, bullish fair value gap levels, and market retraced towards that zone, the first one, and also created a new swing low here. After that, price bounced to the upside, and then we had price retracing back from those highs back towards this discount area. And what we also noticed was, of course, that price really sitting very close by this sell side liquidity on the 4-hourly time frame. So in this case, what we were looking for was of course potential liquidity sweep and then potential move to the upside. This was the scenario on the euro US dollar. This is the 1-hourly time frame, and what we were looking for here, as you can see, this is the Asian session range low, and as we were countering the and waiting for London session, our scenario was this. We were looking for possible suit of this sell side liquidity and then potential setup in order to look for longs, target this Asian session range highs over the 4-hourly buy side liquidity up here. So this was the plan from the 1-hourly. Now moving forward to the 15-minute time frame, what do we notice here? As per our plan, market here after London Open swept this sell side liquidity and also broke below the Asian session range low. And then what we notice here, we had market structure shift. As you can see, after price swept the sell side liquidity, the lows, market swept this liquidity, and we had nice market structure shift to the upside. And what happened on the way to the upside? Our plan was, of course, we were looking for potential retracement back into this fair value gap displacement, this fair value gap zone, this imbalance, and our plan was to look for possible entries on that levels here in order to target the Asian session range high here, and also later on we could also target and aim for more for bigger risk reward ratio here to target this buy side liquidity on the 4-hourly. So this was our plan, and what happened after? If you go forward to the next chart, as you can see, price was just too powerful and we didn't have any retracement here on the 15-minute time frame. So our plan was simple. We had this structure shift to the upside, the imbalance was set here, and we were looking for possible retracement before this buy side, the buy side liquidity would be taken out here or later on. And if you go to the next chart, 5-minute, notice this move to the upside. What do we notice on the 5-minute? We have move higher, small retracement, move higher, small retracement, move higher, small retracement, move higher, and another small retracement. Now this is very common pattern you will recognize when you will focus on the 5 and 15-minute time frames. Moving forward, what do you see here? We had, as you can see, as we said before, move higher, retracement, and so on until this buy side liquidity, the Asian session range high, were taken out. And when this liquidity is taken out, we are not, of course, interested anymore for for potential long trades, even if the price retraces here. So the common pattern you will see when you will trade the 5-minute and 15-minute time frames is that if I go to the drawer here, as I explained many times in the previous videos, sometimes, for example, you will see like a 15-minute time frame moving higher, leaving you fair value gap level. Price will moving higher, and your plan will be, of course, to wait for retracement back to the fair value gap zone, and then you will be looking for longs. But sometimes on the lower time frames you will not get this retracement. So for example, you will have 15-minute fair value gap zone somewhere here, and on the 5-minute you will see price moving higher, giving you those small retracements. And this, not this, but those retracements are just for liquidity grab. So we'll see price moving higher, giving you those higher lows with small retracement, and once this liquidity is taken out, you will see a nice big drop back to the higher time frames, fair value gap zone, the PD area. In this case, if this is the 15-minute time frame and this is the 5-minute time frame, once this liquidity is taken out of the market, you will see liquidity grab back to the hard time frames PD area, in such case the 15-minute zone. So this is exactly what we had here. So this is very common pattern. So our plan, of course, once this structure shifted, we want us to see retracement and then look for potential target towards the buy side liquidity up here or up there. And if this is not happening and you see like price moving higher, giving you all those smaller retracements, notice and be careful, because this is just a trap to capture this hard time frames move and retracement back to the hard time frames PD area, in such case the fair value gap zone from the 15-minute time frame. And this is very common pattern you will notice when you will trade the trading style we trade. And now let's move on to another setup which occurred today on the euro US dollar. So this is the 4-hour time frame. So on the 4-hour time frame, what we had was, of course, a bullish structure. We formed this support, we formed this resistance, the high, and price was retracing, and our interesting level of potential support was this previous highs and also this bullish fair value gap zone. So this is from the 4-hour. So here on the 1-hourly, this was the plan. We had this Asian session range up here, and once the London will open, we were looking for possible scenario like this in order to look for longs. Now moving forward to the 15-minute time frame, this is the same scenario we were looking for here. And what do we notice here on the live charts of the euro US dollar? This was the plan. We had this Asian session range from before, and we were looking for possible structure shift in order to look for longs, right? So what do you notice here? As the market moved towards this zone, we had nice structure shift. So price was moving higher. We had this lower high formed, market tapped into this liquidity pool again, and then we had nice structure shift to the upside. So our plan was, of course, to look for potential, of course, a retracement back. So if you have like structure shift here with a fair value gap zone and everything, we are looking for possible retracement back in order to target those highs up here or the next liquidity pools up there, right? But same thing happened as on the previous example from this week. We had a structure shift, we had nice fair value gap level and zones here, and then we had also another, as you can see, another fair value gap zone, but price was just too powerful. Like, as you can see, we had price breaking previous highs. On the way to the upside, we had fair value gap zones, and we were looking for possible retracement in order to target those highs up here at least, right? So the price was too powerful again, as on the previous example. This is just part of trading. So if I go to the 5-minute time frame right now, what do you see here? The same thing as we explained before. Now, sometimes you will not get retracements you want, and price will be just too powerful. As you can see, we have a move higher retracement, move higher small retracement, move higher small retracement, move higher, and once those previous highs were taken out, this is just a trap, as you can see, for those long traders to get trapped. So on the 5-minute, same thing as we explained before. On the 50-minute time frame, we had fair value gap zone here and here, but we didn't have any bigger retracement in order to look for longs, right? And what happened? Price was just too powerful. Price was pushing to the upside, building this, small volatility, small liquidity pools, as you can see, all those previous lows. And once the previous highs were taken out, this was just, big retracement back to the higher time frames PD area, the fair value gap zones on the 50-minute time frame. So do you notice the pattern here? Same thing as on the previous example. 5-minute was pushing higher with small retracements, while on the 50-minute time frame, the bullish fair value gaps were down there, serving as a support levels, the liquidity pools towards which price may move as soon as it took all those previous short-term lows and bounces to the upside. So hopefully you will learn something from this video, and this video, if you will rewatch it again, will make your trading, of course, much better, and hopefully you will learn something, as I said before. So if you have any questions, just comment below or send me an email. Take care.